Time for the markets. A new WASDE report dropped while the numbers fell.
That's right. You know, it looks like the WASDE didn't really make much of an impact. We'll get into that. But first, the numbers. What were last week's biggest gains and losses? And then this month's WASDE report. What did it have to tell us? And finally, we speak with MSU row crop economist Will Maples to get his thoughts on the WASDE's impact. So, markets closed last week on the downswing, an interesting turnaround from last week. Let's take a look. Last week's biggest gain, lumber up 39.5 bucks, a near 9% increase from the previous week. Last week's biggest loss, wheat down almost 40 cents. That's nearly a 7% decrease from the previous week. This month's WASDE report dropped last week, a monthly domestic and global supply and production report released by the USDA. Like last month, this particular WASDE didn't appear to affect market prices. Biggest takeaways are mostly to do with higher production both in the U.S. and abroad. Bella Bingham has the numbers.
U.S. wheat supplies raised due to increased production and stocks. Production up due to higher acres and yields. Imports down while feed and residual use up. Season average farm price $5.70 per bushel. Global wheat supplies increased due to higher stocks and production, mainly in the U.S., Canada, and Pakistan. Consumption also up on higher feed, seed, and industrial use. U.S. corn stocks down due to greater use. Exports raised due to increased sales and shipment. Feed and residual use up 75 million bushels. Season average farm price $4.30 per bushel. Global corn production down due to declines in the EU, Canada, and Russia. Exports raised for the U.S. while global stocks up 0.9 million tons. U.S. rice supplies up due to increased production and imports. Production up due to more harvested area and yield. Imports up 1 million hundredweight. Season average farm price unchanged from last month. Global rice supplies increased nearly 1 million tons due to record production in Pakistan. Consumption and residual use also at a new record, about 527 million tons. U.S. soybean production projected down due to less acreage. Yield unchanged at 52 bushels per acre. Ending stocks projected down due to less production and use. Season average farm price $11.10 per bushel. Global soybean beginning stocks up, imports and exports also up. With lower production and minimal changes to use, stocks slightly lower compared to last month. U.S. pork and beef production raised while turkey and broilers decreased. Egg production unchanged. Cattle prices continuing to rise. U.S. milk production forecast lower than last month due to slower growth in milk per cow. For 2024, cheese, butter, non-fat dry milk, and whey prices raised due to tighter milk supplies. U.S. cotton projected domestic use and exports are unchanged. Planted area 1 million acres higher. Ending stocks also higher. Season average farm price 68 cents per pound. Global cotton beginning stocks down while consumption up slightly. As a result, world ending stocks down 860,000 bales.
So now we have some context. Why did the markets respond the way they did? I spoke with Extension row crop economist Will Maples to get his thoughts on the matter, and he says, although it looks like corn was the biggest winner, seems markets didn't care. So, Will, we recently talked about the crop progress report, and now this month's WASDE report has dropped. Did it tell us anything new?
Yeah, so out of this month's WASDE report, really the biggest takeaway was this was a pretty friendly report to corn. They updated corn demand for this incoming marketing year by nearly 100 million bushels. This was really helpful. As we know, we talked about the acreage report last time I was on, and we saw an increase in corn acres. So that helped offset some of that further supply of corn we saw come on to this report. It helped counteract some of that higher supply, better demand. We also saw ending stocks come down a little bit for corn. Unfortunately, though, the market didn't really care. We didn't really see a good bounce in the market based off this kind of favorable news. You know, we haven't even got into the marketing year yet that these demand estimates are for, so we got a long way to go still to see if these demand come true.
Well, any predictions on what any commodities are going to be heading post this report?
So right now, you know, this time of year, we're kind of at the tail end of the weather really being a driver in these markets. In kind of mid-July, we don't worry as much about corn and weather anymore. August, we could still see some weather come into play for soybeans. Soybeans are really made in August. But the biggest thing to kind of keep an eye on going forward is where does USDA end up putting corn and soybean yields? It was a wet spring getting planted, and a lot of time those planting delays don't show up till harvest. Crop looks good, but because of those late delays in planting, we could potentially see some yields come down. Would be the main thing on the supply side that could maybe give us a bump in prices.
To reiterate what Will said, we're getting out of the weather having the largest effect on the markets. Not to say that an extreme event could cause waves, but growing season underway. We'll see what happens.